Welcome to the latest edition of the Balancing Act podcast with Singer Lewack. In this episode, we're joined by Orlando Torres, audit partner in Southern California, and Brad Bingenheimer, government practice leader from our Salem, Oregon office. Together, they'll explore the challenges governments face in issuing timely financial statements, the impact of staffing shortages and evolving standards, and practical steps to improve reporting processes. If you're in the public sector or work closely with government finance, this conversation is for you.
Good morning, everybody. My name is Orlando Torres. I'm a government audit partner out of Southern California. And here with me is Brad Bingenheimer. He is a government audit partner and the government practice leader of Singer Lewack. And he is out of the Salem office in Oregon. And we are going to be talking today about we're going to share with you first some work that the GFOA has done recently to address financial reporting issues. And then we're going to provide some best practices to address certain challenges identified by the GFOA. Brad, if you would like to start talking about those surveys and articles that the GFOA issued recently.
Yes. So thank you, Orlando. The GFOA recently had a survey and they issued an article talking about various challenges with governments and financial reporting. And there's some really key findings from that survey. And the first one is one that really surprises me the most, which is the public interest in governmental financial reporting. It seems that, there's governments everywhere and, people always, are talking about government spending and what the government's doing, but nobody ever pays any attention to the actual financial statements that governments prepare and are audited. And what's really amazing is that people don't realize that state and local government spending in the U.S. accounts for over 10% of our GDP. So this is a huge portion of our overall economy. And so, the first thing is really, I think we would like to have people become more interested in these government financial reports. The second one that point that came out in this survey is that the timeliness of financial reporting for governments has some issues. And the quicker that financial reporting is completed, the greater the perceived value. However, many governments struggle to issue their governmental financial statements in a timely manner. And there's various reasons for that. We'll talk about some of those here this morning. But also, we have some of the thoughts from the elected officials. Now, elected officials, they really care about getting a clean opinion on their financial statements, but it seems like what the financial statements actually are presenting appears to be somewhat less important to them. And that's really what they should be paying attention to. Sure, you can have a clean opinion, but the financial statements may present some very glaring issues that they should be paying attention to, because the audit report simply says these financial statements present fairly the financial position results of operations. But they really should be concerned about what those are, not just that the report says that they present fairly. And then the other one of the findings that I'd like to talk about is that GASB over the last 2 decades has been very active in issuing standards. And some of those standards, people are beginning to question the value of them. In particular, some of those that were been issued in the last few years. Things like the standards on other post-employment benefits, asset retirement obligations, and then you get into some of the more recent ones even, which is on leases and subscription-based information technology arrangements. So we have some things on the government side that really come out in this GFOA article. Now, compounding this issue is a second factor. This last year, the AICPA and NASACT issued a report on public sector CPA resources. And some of those findings from that report are also kind of, glaring here. The first thing is that 85% of the respondents indicated that the inability for state and local governments to offer competitive compensation packages had a moderate to large impact on their ability to hire and retain qualified accounting staff. So if the governments can't hire and retain people that know how to do this work because they can't offer the compensation for it, it really does create some challenges for them to be able to prepare the financial statements in a timely manner. Also, 63% of the response indicated that having the technical knowledge in governmental accounting also has a moderate to large impact to find those qualified staff. The governmental accounting and financial reporting is not being taught much in colleges and universities these days. And they might spend, a couple weeks in the middle of their intermediate accounting on this subject. Yet here again, this accounts for 10% of our GDP. Yet the accounting education programs don't pay much attention to it. And then also the attitudes of elected officials. 73% of the response felt that legislative bodies don't really place a high value on what the accounting staff do. They are processing a large amount of information, and they are, responsible for keeping the accounting records and preparing financial statements, but yet they are not highly compensated. As we've talked about, the compensation packages. And, many times, legislative bodies have limited resources and they can only spread them so far. And many times they don't look at the accounting function as being nearly as valuable to the general public as, say, police or parks or public works. So the finance department has a tendency to, be lower on their list of priorities. So once again, creating some problems with them being able to timely report. And then that's all on the government side. On the other side of the fence is the auditors that are going to be auditing these financial statements. And there's some challenges from the CPA profession. Once again, one of it is, having the technical expertise needed to audit governmental financial statements. Those audits are different than the audits of businesses or even nonprofit. Completely different set of standards for the accounting work, much more complex in the financial reporting. So there's that technical expertise. And part of it comes back to kind of this value proposition. CPA firms find that the profit margins on governmental audits is some of the lowest that they have. And so a lot of firms have basically said, it's not worth us economically to do these audits anymore. So many firms has completely gotten out of auditing local governments. And then finally, as an auditor, one of our other challenges is that the clients aren't ready. Well, why aren't the clients ready for the audit? Well, all these other factors, not being given the resources to hire people, having the technical knowledge required, and their inability to have qualified staff. So we kind of have several factors here that really come into play in this whole issue.
So assuming that you have the right resources, right? Again, it's been a challenge. And in addition to what the survey says, Brad and I have seen that in practice as well. Finance officers that are retiring and they don't really have a succession plan in place because of budget constraints, they don't necessarily are properly staffed. If they have to hire, they don't necessarily have the budget to hire new resources or experienced resources, that we have said, and so that creates a bunch of difficulties. And in many instances, primarily in the smaller governments, we also have seen that people running the accounting or finance department are not necessarily people with the experience or the background to do that. They just have somebody there with administrative experience or managerial experience, and they don't really necessarily have the accounting or finance background or experience to run all those responsibilities. So that's kind of what we have seen in practice as well. what we can do or what you can do, we have some thoughts here about things that management can do to address those challenges. And probably the first one before doing anything is stepping back and doing an assessment of what is driving those challenges in your organization. Is that we just came with some example, real challenges that we know are there, but each organization will need to do its own assessment. Like, is it just resources, or are other competitive priorities out there? I mean, many times we know that many of our governments, of our clients, they just run their books throughout the year on a cash basis or modified modified accrual basis, probably. And this task about preparing the financial statements is probably just an annual, right? It's not a recurring task. It's just something that is done annually. Probably that will be, you will have conflicting priorities with the budget that also needs to be approved for the next year, right? So preparing for year-end financial reporting is not only a task that you will be doing at the end of the year. You will also be dealing with the next year's budget. You will also be dealing with closing this year's budget, in closing your books in budget. And there's a bunch of other priorities. So evaluating what needs to be done with a mindset of getting the financial statements, quality financial statements issued on time is another exercise that requires planning and risk assessment. So what is driving those challenges in your organization? It is resources, it is competing priorities, it is the data that you are using to prepare the financial statement. Is it going to be available on time for financial statements preparation? Do you have your actuarial evaluations? Is capital assets an area that takes a lot of time to you to prepare all the transactions during the year, right? What items had to be capitalized or needs to be capitalized? How much is the accumulated depreciation by function or program, right? There is a lot of things that need to be considered, and we're just touching here on some of the areas of the financial statements. But you really need to do a risk assessment to identify all those areas that cause delays. The GFOA came with, after these surveys, they came with 3 articles, very, very good articles, addressing, one of them addresses the fact that some governments, they just focus on issuing the financial statements within 6 months after the end of the year for GFOA reporting, or just focusing on the single audit or other reasons. But some governments have done a great job in issuing much earlier, some of them issuing within 4 months, which is quite a challenge for many governments. And the GFOA just talked to those governments that were able to issue the financial statements within 4 months. And they came with a number of ideas that those governments are doing already to share those ideas with other governments. Let's start with sharing some of those ideas with you. One of them is determine if there are some balances out there that can be estimated versus being accurately recorded, right? One thing that you need to consider is that you don't need 100% accurate financial statement. You don't need to spend 2 weeks finding a $2 difference in your financial statements, right? You don't need 100% accurate financial statements. You just want to make sure that they don't have material errors. But it's a reality that some balances require a lot of information for you to get everything that you need to prepare those balances. So some accruals, for example, one of the things that this group is recommending is some accruals may be estimated versus accurately calculated. And so one thing that you can consider, if you need to bring a lot of effort and information to calculate certain balances that may take up to 2 months after the end of the year, maybe you can estimate some of it. Talking about got any information after the end of the year, Brad, I may defer this one to you because this is the topic that you address all the time, is the availability period for revenue recognition. How long is your availability period? Because that's a policy defined by each government. Do you want to address that point, Brian?
Yeah, sure. So this is one of those kind of, I think, misunderstandings overall in government accounting financial reporting, is this idea of, this period after the end of the year where you would say that revenues are both measurable and available. Well, if you go back to the standards talk about, first thing, the only time they ever said a 60-day period was back in an NCGA statement that basically said for determining the availability of property tax revenue, that period should be no more than 60 days. So that period of availability is, as Orlando, you said, it's a policy decision. So you don't have to maintain a 60-day period. You could, as a policy, determine a 30-day period. And even at that, many of those things may very well be able to be estimated, like property tax revenue. Fairly consistent type of revenue that you get. And other types of revenues may be very consistent. Things like franchise fees, even hotel motel taxes could be estimated that's available after year end. So you have a variety of things. So it really does become important for you to understand the revenue recognition rules. And we have the very good standard out there that a lot of people just kind of, it's like measurable and available. Well, no, there's more to revenue recognition than just that. So the idea of keeping your books open for 60 days after year end, you need to think about throwing that idea away and thinking more about, what can we do to identify the revenue recognition within a shorter amount of time.
Right. So that's something that you can do with not only by estimating certain numbers, and something that you can do to accelerate financial reporting is working on estimates of certain balances, not just on the expense accrual side, but also on the revenue accrual side. You can do that with some payroll expenses, something that we see very frequently in practice, that some payroll accruals, you may not necessarily have all the detail accurately to calculate if there is just a portion of the payroll that needs to be accrued at the end of the year. You can do it by estimating or coming with a practical approach to calculate that. You can accrue certain expenditures for which you would normally do not expect to receive the invoices on time, like certain construction projects and certain other services that that the service was provided by the end of the year, but you, for some reason, you're not expecting to receive the invoices from those vendors in a short period of time. You can estimate those based on experience. And on the revenue side, the same thing. I mean, normally if there's some revenue at the end of the year that you haven't calculated yet, it will be a fraction of your entire year revenue. So likely based on your understanding of your business, you can come with a very good, very reasonable estimate of what will be that unrecorded revenue that you have earned already, but you haven't recorded for some reason. So these are a couple of recommendations provided by this group of less than 4 month reporters. And another thing that they highlighted, and the GFOA also came with an article called Finding the Balance or Rethinking Materiality in Governmental Accounting, and is that consideration of materiality in the preparation of financial statement is important. The best example is, why do you have, in many cases, a capitalization threshold, right? And so there's a number of balances that that they are close to be 100%. I mean, again, you don't need 100% accuracy, but there's a number of balances that you can come with a very accurate number that you can live with, and you don't need 100% accuracy. So you need to consider what is material to your financial statements to determine how much work do you need to calculate each balance. Some balances are not. If you look at these surveys that were prepared by the GFOA, you can see that some government officers or government officials or those charged with governance, they are not really focused on certain information in the financial statements. Of course, there's judgment involved, but in many cases, there are some balances in there that are not that material, that significant to the users of the financial statements. So you can gather enough information to put together those balances as close as possible to what you will consider accurate balances. And then you can focus on the other information that probably takes more time to complete. Another recommendation talking about a capitalization threshold is, are you using capitalization threshold that are up to date, to your circumstances? When was the last time that you updated your capitalization threshold? Are you still capitalizing items that are over $500? One recommendation that we see out there is that it is a best practice to be updating those capitalization threshold frequently, right? Maybe not every year, but why do you need to maintain the same capitalization threshold for over 10 years? Inflation impacts your materiality. There are so many factors out there that you would like to consider whether your focus on certain balances deserve the amount of time that you are dedicating to calculating them. A few other challenges that you would like to identify early is, are there any new standards that need to be implemented for your reporting year? Many times, those standards need to be identified early because you probably may need to gather certain information that you cannot wait until after the end of the year to start gathering it. So something to consider is attend those trainings that are many times provided during the spring if you are a June 30th entity, or a few months earlier, so that you can identify what type of new standards are coming up that you need to address for your fiscal year reporting. Those are items that we can mention. Do you have any other item, Brad, that we can share regarding things that could be done up front?
Well, one of the things that I really strongly recommend is that you go through a process where you document what it takes to close the reporting period and prepare the financial statements. So put it on a timeline as to, the order of things, what needs to be done, then assign due dates, internal due dates for that information. If you have that a plan, then you can at least monitor it, and hopefully if you hit those targets, and doing those things as early as possible will help expedite the whole process. And of course, you should, in that process, you should look at those pain points that really create the most work. Tackle those issues early on. For some reason, many of our governments find the whole area of capital assets to be something that they don't either like to do, or they don't do it throughout the year. And usually, if we're out there auditing and we may be completely done with everything except capital assets, that should be an area that is routine throughout the year. As you acquire capital assets, you have your capital outlay. Look at those items, apply an appropriate capitalization policy, as you were saying, Orlando, and then add those to your capital asset records throughout the year. You don't have to wait to after June 30th to do that. Do that throughout the year. Then at June 30th, you're basically going through and just basically verifying that you've got everything that you should, and it's been properly, categorized. So there's that. Document that process and then follow it closely. And then, of course, you've done all this. Make sure you're really prepared for your audit. And there are some basic things. As auditors, we see a lot of things. And, the first thing I always tell my clients is make sure that each fund is in balance and that the equity accounts agree to the prior year financial statements. Every year, we have at least a handful of audit clients where that's the first thing we have to deal with on an audit. And really, that's something that the government should be doing. Just do that one thing. And then after that, as Orlando said, look at your balances, what can you estimate early on, and provide that documentation to the auditor. For every significant account, balance sheet account, you should be providing documentation to your auditor. And then, some other things, just simple things you could do. Look at your payroll registers and the gross, amount of compensation of those. Does that agree to the total amounts in your general ledger? If they do, give that to the auditor. Here, I've already done that for you. And like I said, that should be something that's done throughout the year anyway. Then the auditor is simply auditing that. Otherwise, the auditor has to say, well, give me all your payroll registers, get all the detail of the GL. Now we have to compare them. And if you've done that, that's going to expedite the whole audit process. Those types of things. Anything you can do to help the auditor's job be easier expedites this.
So you might be asking yourselves, when am I going to find the time to put together a timeline for my audit? Well, again, we know that when you're approaching, we're talking about accounting and finance professionals here, we know that when you're approaching your year end, there's so much stuff going on that probably is not the best time to try to put together a timeline. Our recommendation would be that you start working on that 2 or 3 months before the end of the year, so that you don't have these competitive priorities with the budget that you need to put together for the approval before the end of the year. So if you start 2 or 3 months thinking about this, sitting with your staff, talking about, okay, what were the challenges last year? Why did we complete this 3 months after the end of the year? What can we do this year to do it earlier? Can we talk to the auditors to see if they have a different view, a different recommendation on how we can do this, so that we cannot provide this to the auditors 2 or 3 months later after the end of the year? So our recommendation is that you start looking at this 2 or 3 months before the end of the year, so that you can come with a plan. It's not going to be executed 100% as you planned, but you at least you have a plan and you have a time, and then you can work with your team on what tasks need to be completed first, what task could be completed later. So from there, one thing that we do, and we recommend of our clients to take the use that benefit, is that we offer annually before June 30th, because most of our clients have a June 30th year end. But we offer to all of our clients this seminar, government seminar, where we address all these new accounting standards that are effective for the fiscal year that is going to close on June 30th. We talk about all the new pronouncements. We talk about single audit issues. We talk about best practices. We talk about recommendations for closing the end of the year. And it's a live session. So if you're there, you can also ask questions about how to do certain things better. So that's one of the things that we offer to our clients. We do it before the end of the year, just to help you prepare for the closing of your books. And there's a number of other things that we can do after the end of the year as well. We as auditors, there are certain things that we can do for our audit clients. We can help with the implementation of those new standards to some extent. We can help with certain calculators, certain journal entries at the end of the year. Of course, management need to review those journal entries and approve them. But there's a bunch of other stuff that we can do if we are the consultants as well. So, Brad, would you like to talk about our services as consultants for government clients?
Yes. So various opportunities that we have to help you out. If you want to bring us in and help you develop that timeline for the year-end close, we can assist you with that. We have enough experience to know all the little details that come into it. So we might come with a more fully, idea of all the tasks that need to be done and our thoughts on how soon they could be done. So we could definitely help with developing that. And as you said, new standard implementations, we can help with that in a variety of ways. Also, we do have the ability to provide education to your staff. One of the things that we are currently developing is basically a governmental educational series that's going to take you from the very basic governmental financial reporting and accounting requirements all the way through to a preparation of an annual comprehensive financial report. Some of the topics included will be, the basic stuff, and then we have an advanced topic class where we're going to talk about some of the more complex areas like leases and pensions, capital assets. A lot on capital assets. We think it to be an easy area, but that's not so much. They're going to have classes on debt management, developing, helping you, what does it take to prepare an annual financial report. You talk about grants management. We haven't talked at all today about the whole single audit area. That'll be a topic of a whole different conversations between us. But yeah, lots of things that we can do to help you be better prepared and expedite the whole reporting process.
So if there is anything that you think we can help you with, feel free to reach out to us. I mean, we can present to you what we can do to help you. Brad can be reached out at Bingenheimer at singleruach.com, and I can be reached out at Torres at singleruach.com. And reach out to us, and we can talk about all these opportunities to help you. Maybe I can say these couple of final remarks. Please establish your goals and an executable plan, ideally 3 months before the end of the year. Reach out to your consultants as necessary to assist with the year-end closing and financial reporting strategy. And reassess everything. I mean, there's always opportunity for improvement. And if you could start putting some goals in your to-do list to accelerate your financial reporting every year, a couple of days here, maybe a week, 1 year, that will be the best way to push yourself to excellence and come with more timely financial statements.
I don't have anything else to add. Otherwise, I would say yes. Reach out to us. We're more than happy to help and have conversations with you and see how we can help you be more successful with your year-end financial reporting.
Wonderful. All right. Thank you, everybody, and have a wonderful day.
Thank you.
That wraps up this edition of the Balancing Act podcast with Singer Liwak. We hope today's insights help you rethink your approach to financial reporting and inspire new strategies for success. If you'd like to learn more about our government services, visit singerliwak.com. And remember, establishing goals, reassessing your processes, and planning ahead are key to achieving excellence in government finance. Thank you for listening, and we'll see you next time.